The Power of 3, a full masterclass. In this video, I'll be going over liquidity accumulation, which is our setup, liquidity manipulation, which is our fake out, and liquidity distribution, the real move. And I'll also go over full examples on how to trade the power of 3. Who am I? I'm Wendell, aka Spektrades. I'm a full-time day trader with 6+ years of experience in swing trading, day trading, and scalping GBP/USD Forex and NASDAQ futures. I was just like you. I spent years mastering countless strategies until I discovered ICT and SMC, which changed everything for me, allowing me to quit my job and mentoring over 30,000+ students. And now I'm here to share the wisdom and the knowledge the Most High has blessed me with. Take this seriously. Make sure you guys are taking notes also. And without further ado, let's get straight into this video. First, let's get into the anatomy of the phases, the key characteristics. You can see that we have 3 phases for our power of 3. We have our accumulation phase. The accumulation occurs after a significant trend or before news events. Volume is low and price seems to be boring. Smart money collect orders without tipping off their intentions. A key tip is to identify the consolidation zones either on the 1 hour or on the 4-hour chart. Our second phase is our manipulation phase, where we have sharp spikes in price, up or down, grabbing the liquidity. Commonly occurs during high impact news or at key session opens, triggering stop losses and activate retail orders. A key tip is to look for wicks beyond consolidation highs or the consolidation lows. That's how we identify our manipulation. The third and final phase is our distribution. This is where the real move occurs, breaking out of the manipulated range, trends in the direction of smart money original intent, and often aligns with intentional order blocks or fair value gaps. Quick tip is to enter after a confirmed market structure shift. Some key insights is that these phases are designed to manipulate retail emotions, fear and greed. Avoid trading in the manipulation phase and wait for the distribution phase to unfold. Let's go over the power of 3 and some key bullet points. The power of 3 happens across all time frames, but it's most powerful on the 4-hour and daily charts. This right here is where we find our higher time frame zones, where if you are a scalper, you can use these higher time frame zones to scale it down to the lower time frames and trade these power 3 models. It's the foundation for identifying institutional activity, and also recognizing this sequence can prevent you from falling for traps and help you trade alongside smart money. Let's go over this chart right here where we have our AMD, our power of 3. Just like we stated, the first phase that we have is our accumulation range, where liquidity is being built above and below this range right here. This is your consolidation range. Price is playing in this tight range right here. The second phase is our manipulation phase, where price push up higher to clear the above liquidity of this consolidation zone, and then push down lower to give us a breakup structure of this low right here. And on that pullback, right, this is where we use our breaker, right, the last bearish candlestick before this bullish liquidity sweep right here, and then price push down lower to give us a breakup structure. This leaves this as a breaker block. This is where we place your entry right at the low, stop loss out at the old highs, and this is your distribution move. So accumulation, manipulation, and distribution. The power of 3 is super simple, but it works, right? It's super simple. And when you align your charts, just like I'm going to show you guys in this video right here, so make sure you guys take notes and stay in tune, the power of 3 will make full sense. Let's go over the execution blueprint, applying the power of 3. This is the steps to use the power. The first thing we have to do is mark our accumulation zone right here. Some key notes: find areas of consolidations on the higher time frames, such as the 4-hour or the daily time frames, and note liquidity above and below the old range. As you guys can see right here marked in orange, this right here is our consolidation range. Liquidity is being built above and below this old range right here. We see that price push down lower to give us a liquidity sweep of this old low, then rallies higher to give us our market structure shift. So this right here, this push down lower to clear the second liquidity, is what we identify as our manipulation phase. We wait for price to sweep the liquidity, and then we look for long wicks or sudden spikes beyond the range. As you can see right here, after price left this accumulation range right here, price sharply push down lower and give us a liquidity sweep of this old low, and push up higher and give us a market structure shift. This right here confirms our trend reversal. And third, we enter during the distribution move. We confirm the move with a market structure shift, and we use the 15-minute or a 1-hour chart for precision entries. As you can see right here, price left this 15-minute fair value gap after our market structure shift, and price left this inducement liquidity low. We see that price push down lower, clear this inducement low, tap inside of our 15-minute fair value gap to then extend higher to opposing side highs right here. And also for an example entry is to put your stop losses below the manipulation candle, and also target key liquidity pools or opposing zones. Some quick bonus tips is to combine the power of 3 with order blocks or imbalance zones for added confluence. And also be patient. This sequence often unfolds over several sessions. Our accumulation may happen during the Asian session, and then our manipulation during the London session, and then we may have our distribution move during the New York session. This right here is how we use and apply the power of 3. Now let's go on the charts and go over some examples on how we use the power of 3 live in action. And if you guys want full access to today's videos, make sure you click the first link in the description and check out the Spark Trading U Discord. Scroll down to trading resources and look for PDF. And inside this section right here, this is where you're gonna find the PDF of all our videos. Now we're on our charts. The first thing we want to do is observe our higher time frame trend. We see that price push down lower and give us a liquidity sweep of these old lows and rallied higher to give us a break of structure of this 4-hour high right here. So now we're playing inside of this 4-hour range from this old low to this old high right here. And now we have our higher time frame range. Let's go down to the 1 hour to look for more price action. And now in the 1 hour, just like I stated for our power of 3, the first thing I'm looking for is my accumulation. One thing that I use a lot is the Asian session. Just like I say, the Asian session usually give us our accumulation range for the day. So I will use my Asian range indicator. I'm gonna turn it on right here. And just like we stated, we have liquidity above and below the Asian session range right here. So I want to see price either push down lower to clear the below liquidity and give me my manipulation to continue this uptrend, because our range is from this old low to this old high. So I only want to see a pullback to clear the below liquidity, mitigate a zone to then extend higher. So first, like I state, is my accumulation. We just use our Asian session to find our accumulation. Now let's get down to the 15-minute time frames to see even more price action. Now I'm on the 15 minutes. You guys can kind of see my accumulation even building even more now, right? You see the price just building inside of this consolidation range right here, in this tight range. Price is not really going nowhere. It's just playing around up and down. This is kind of what you're looking for. And below this order range right here, what do we see? We see a order block right here, right? Just like I state, we can use the order blocks or the fair value gaps as confluence aligned with this power of 3. So I want to see price push down lower to give me a manipulation of these Asian lows inside of this order block to then extend higher to opposing side highs. Now let's play price and see if we get that. And boom, we see that price push down lower and tap inside of our 15-minute order block. If you're a day trader, you can place your entry right here and your stop loss at the old lows, and you're targeting prior old highs. This right here could be your set and forget trade right here. As you can see, let's play price. And boom, price accumulated, push down lower to give us a manipulation of the old lows, tap inside of our order block, and then extend higher to come and clear our old highs right here. But if you are a scalper, right, and you want that lower time frame entry, let's go down to the lower time frames to see even more price action. And I want the 3-minute time frames. After price taps inside of our 15-minute order block, price rallied higher and give us a lower time frame breakup structure. And on that pullback, right, on that pullback, you can place your entry at this order block and your stop loss at the old lows, and you're targeting the same old highs right here. This is how you take the trade if you were a scalper, right? And you want that more confirmation entry. Now let's look at some more examples. Let's go through this example together, right? First, we are looking for our accumulation range. We see that price is accumulating orders in this tight range right here. You can minimize it from the old highs right here to the old lows right here. So the first thing I'm looking for is a manipulation, either higher or lower. And that's why price to see if we get this manipulation. We see that price rally higher to give us a full body manipulation move of this old high right here. That's number 1. Perfectly. This is our 15-minute sweep. The second thing I'm looking for is my market structure shit, right? A break of structure of the low that did that liquidity sweep. Price push down lower, give us this full body break of structure right here, perfectly right here. This is my market structure shit. And the third thing I'm looking for is that I'm just trying to get in. I'm trying to find a breaker block or a fair value gap. You see that price lift us this zone right here, this demand zone that got broken. I can just grab my entry right at this old zone right here, my entry right here, my stop loss at the old highs, and I'm targeting prior old lows perfectly. We see we have accumulation, manipulation, took the money above, and now we have money down here and money down here. This is where we're looking for our distribution move. Now let's play price to see if we get this move. Price came back, mitigate my fair value gap, but my stop loss is at the old high, so I'm safe. And boom, to come and clear this old low right here, our pool of liquidity. So price went from pool of liquidity to pool of liquidity. We have accumulation, manipulation to distribution. Boom, this right here is the power of 3. Power 3 is probably the best trading model. If you guys want a 4-hour course on this exact strategy, click the first link in the description and join the Spark Trading community, where we have all the PDFs and a 4-hour course on this power of 3 strategy. Well, this is it. I hope you guys got a lot of value from this video right here. Make sure you guys like, subscribe, and comment down below what you think. This is it. Spektrades out.